So today I'll be talking about my bias US dollar index for the week of June 3rd to June 7th. Now this is the US interest rate in the Federal Reserve. We see that since after the pandemic 2021 into 2022, the Federal Reserve has been front loading interest rates for the longest time. It is actually at the highest point it has been since 2007. It has never been this high. There are talks about interest rate cuts, but I guess we will have to wait and see. Okay, with that out of the way, we see we've been having a very strong dollar because of these very high interest rates. However, it seems we are topping up and we'll be expecting rate cuts anytime soon. So with that out of the way, we see that the dollar has been a good candidate for buys for the longest time, but we might be switching gears to lower interest rates, which might cause the dollar to dump. But then we'll see how it goes. Again, look at the previous video to understand why I use bond yields and how I approach it. I don't like calling tops in the market. However, I anticipate them. I would want to see lower prices going forward. Now, if we go into the daily time frame, we see where we are currently and how we ended the month of May. This is where we've been pushing throughout the year. We've come back to this order block, we've broken market structure here, we've returned to this order block, and this was how we ended the month of May. The last 2 days, very bearish. I'm looking at this level for a break to see market continue lower. Now, if you look at this, you realize that this year has been pretty spot on with the seasonality. Now, this is the month of June. June is a seasonally bullish month, as the seasonality here depicts. The seasonality suggests that the month of June has seasonally been bullish. So I will keep that in mind and watch what price tells me going forward. I don't see anything else of interest. There's been no divergences between the bond yields to confirm this bearish move. So I'll be looking out for that as well. Like I said in the previous video, the US dollar is positively correlated to the US bond yields. So if I am bearish on the bond yields, I am also bearish on the dollar. We've been pressing up higher since the year started, same as the US bond yields. So bullish all the way from January to about April, but still bullish because we've not taken out market structure to turn around. So we've been bullish all through the year. This divergence on the highs shows that there's underlying distribution over here and big players want to take price lower. And like I said, please watch my previous video so you understand more of why I trade with seasonality as a confluence. Now that being said, that is my bias going into the week. I want to see lower dollar. I want to see US dollar index go lower for the week.
Hello guys, welcome back. It's great to see you again. I hope you had a profitable and a lovely week. Alright, so let's get into the market recap for the week of June 3rd to June 7th. It was an interesting week. We had events throughout the week. We only saw significant impulse on Monday and Friday. Now looking at our economic data releases here on the calendar on Forex Factory, we had manufacturing PMI for the dollar on Monday, we had job openings for the dollar on Tuesday, non-farm employment change and services PMI on Wednesday. Interestingly, we had the European Central Bank cut their rates by 25 basis points. This is very interesting because we've been anticipating an interest rate cut by the major banks for the longest time. The Central Bank of Canada and the European Central Bank had rate cuts this week. So we look forward to more interesting price action going forward. And on Friday, of course, we had the non-farm payroll and some other data releases. Now let's look at what transpired during the week on the DXY. Okay, so going into the week on DXY, I was anticipating a bearish week. I would not call the week we had last week an extremely bearish week. We started off quite bearish on Monday. We went below this swing point, made a low, and then we consolidated throughout the week. Tuesday, Wednesday, Thursday was basically nothing, and then Friday NFP was very impulsive to the upside. With this move, I have to shelve my bearish bias for the time being because I was expecting an impulse to take out this low. Without this low being taken out, this kind of impulsive move, and I will show you very soon, we had a divergence with the Euro USD as well. I have to switch bias to the long side because it seems we're riding off this order block right here and taking a look at the way this price action has been pushing down. Without this impulsive push to break structure here and change the trend, we are still bullish as we've been since the year started. So going into next week, and when we look at the market outlook, I'll discuss in detail all the confluences I see going into the new week. However, this is what we have at the end of the week, and yeah, that's pretty much it. I believe also that this impulse has to do with the cuts in the euro interest rates this week. Okay, let's see what the bond yields printed for the week. Alright, so looking at the bond yields, we started the week here. This was the candle from last week. The bond yields were a lot more bearish than the DXY this week. We had a break below this low as expected, as outlined during our market outlook last week. Unlike the DXY, we kept drifting lower Monday, Tuesday, Wednesday, and we stalled on Thursday after taking out this low. And then only at that point did we have this impulsive pullback on Friday going into the end of the week and during the NFP release. Now, the same way I feel about the DXY, I feel about the bond yields, but I will go more in depth in our weekly outlook for next week. With that, I think we've come to the end of this recap, and I look forward to seeing you again when we do the proper market outlook for the next week, because it seems we're going to have interesting few weeks and months, because the kind of price action we have, we should very soon be breaking out of this consolidation that we've been going through for a period of time now. Alright, so look forward to seeing you in the next video. Stay safe and take care.
If you watched to this point of the video, leave a thumbs up, subscribe if you haven't, because why not? Share this video with anyone who you believe would find value in this video, and until next time, stay safe, trade safe. See you in the next video. Take care.